All right, y'all, back to work. The weekend is behind us. The month of June begins. And I'll tell you, it's been a pretty darn good past couple days. We got that beautiful slingshot reversal to finish up the week last week. It's like a bunch of guys made some bank on that. So well done on that. And boy, we nailed a beautiful breakout pullback this morning in the morning trade room with all the SOT members. Now, speaking of breakout pullbacks, it looks like right now, these charts are telling us, it looks like breakout pullbacks are probably where the money is made tomorrow. I have a couple of reasons why I say that. We'll cover that in tonight's video, but there are a couple different ways we time entries. In fact, there are 3 ways we time entries during breakout pullbacks. I want to cover those, some variations of that tonight, because I want to make sure everyone has a roadmap, a game plan to make some money tomorrow as well. So we're talking entries, we're talking exits. The entire system will be laid out tonight in tonight's video. So buckle up, take some notes, charts are ready. Enough of the intro, let's go make some money on what should be a fantastic Tuesday morning. S&P SPY, ready to go tonight. Nasdaq triple Qs are always ready. I have 4 clues on the charts telling us where the money is made tomorrow. One of those 4 clues is right here on the hourly time frame. It's very easy to see that although the bears had a great chance to grab control last week, the buyers definitely still have overall control right now on this higher hourly time frame. I like to use the hourly chart as my overall directional filter. And right now, 1 of 4 clues for tomorrow is the buyers have all the control over long-term momentum. Second clue right now is over on the calendar for tomorrow. We get some big news coming tomorrow. JOLTS report at 10 o'clock Eastern time. We know that job openings, layoffs, and transfer survey will be on the mind of the Fed as they decide about rates later on in the month. It's not the biggest news of the week, though. We got bigger news coming on Wednesday, ISM services. We got trade on Thursday. And of course, the big kahuna of the week this week is the employment number coming out on Friday. So we have a little bit of everything here this week. Got some jobs, got some services, got some trade. And don't forget, we will be listening in closely right now regarding trade headlines, tariff headlines right now. It sounds like there's a bunch of trade deals that are in the hopper and just waiting to get released here right now. So hopefully some good news coming later on in the week. And you know things are not going so well with the U.S. and China right now. So we're watching right now for updates out of the White House regarding trade. That was our second clue for tomorrow. Third clue now is down on some tick charts. We don't use time charts to time entries in our trade room. Let's now drill down to some tick charts right now. See, tick charts, guys, tick charts are based on volume. And for whatever reason, they make the entry timing a whole lot easier. And if you're watching for the first time right now, all the time frames you'll see in the upper left-hand corner, that's a 7,000 tick chart, upper left-hand corner. And that yellow line right there is the only indicator I use to find winning trades. That is the 21 EMA. I promised you guys 4 total clues. We covered two out of the 4 so far. The third clue right now is look at this breakout higher right now. What do you notice about that breakout? If you're a student of mine, you know, right? Separation. Look at the pullbacks right now. Look at the difference between that move higher and that move higher. Look, all the pullbacks are stuck on the moving average there, not anymore. Now, why is it important? Because separation equals strength. Anytime we see markets pop and start separating away from that 21 EMA, that tells me right now this is a very strong bullish trend. That's an important clue, but arguably the more important clue out of the group right now is that range breakout. We had a bit of a range there late morning, early afternoon. And what do we know about range breakouts? We know that one of the most consistent things about technical analysis is that when I see a strong, convincing range breakout, it is only a matter of time before we get a breakout pullback. In this case, right now, off that 59.17 and 3/4 area. Now, I mentioned earlier, there are 3 different ways in which we can time a breakout pullback. So I want to go over those tonight. Make sure we've got some different tools in the toolbox, because you know me, I don't know what the market will give us tomorrow, but I'll make sure we're ready for that for a game plan for tomorrow. I also want to cover some more important too. What if we keep going higher? If we keep going higher here overnight, all of a sudden that breakout pullback, it needs to be adjusted a little bit. So we'll talk about if we keep going higher overnight, how that changes the breakout pullback for tomorrow. So I've got some different variations of this I want to cover, because again, I have no crystal ball for tomorrow. Let's talk about first that breakout pullback though. There are 3 ways to time the entry. My favorite way though is I want to see a nice deep pullback. Ideally, I want to see a nice, sharp pullback. This morning, we had that nice, strong move down. The bears came in. They tried once. They tried twice. And again, we nailed that breakout pullback today in the trade room and get an easy winner going higher. That bear trap right there is the same technique I'm going to look for tomorrow morning off that breakout pullback. So nice strong move down. The scarier the better. Remember, my biggest winning trades are always the scary ones. So nice strong run down. Wait for the price to pull back. Bears once, higher high, bears twice. Then, where are their stops? Remember, guys, if you're caught short in a bullish market like this and you get stopped out of losing position, you buy your way out. This bear trap right here is an easy way to make consistent profits in a lot of different ways. This, of course, being off a breakout pullback. Now, where does the market want to go right now? It wants to go back up and take out that high. Now, pay attention. This is where we start adding to our winners. Remember that separation I mentioned a moment ago? That separation now is really important because now, if I start seeing us pop up now, and I start seeing separation away from that moving average, remember, separation equals strength. Here's the key. Shallow pullback separates off the moving average. Higher high in price, I want to get in right below that low. In our trade room, we call these bear traps. It's basically a 2-try bear trap. Bears once, bears twice. We're buying into their stops, basically squeezing their stops for a run going higher. Then we're adding to our winner. That same separation that gives us strength right now is the same separation I want on the way back up to retest the high. That's one of 3 ways I can enter on a breakout pullback. Let's talk about some variations though. For example, oftentimes we don't get that bear trap, right? A lot of times we'll pull back on this and we simply don't get the bear trap like we saw this morning in the trade room, and we can't snap it back up again. Every once in a while, it'll be a really strong shot down and a whoop right back up again. It almost V-bottom up off that low. Oh, and by the way too, guys, that low right there, I would not be upset at all if we saw a really strong move get underneath that low. I'm calling this right now kind of a bear trap zone. So again, I would love to get a breakout pullback right there, but I will not complain at all if it gives a really sharp move down somewhere underneath those lows as well. So just be aware of that level there, and we'll talk about this again, the Nasdaq here in a moment. But again, in this variation though now we don't get bears once, twice. Now it V-bottoms off that low. And I'll tell you right now, whenever we V-bottom off the low like this, I now start looking for entries underneath prior swings. If it V-bottoms off that low and bounces way up now, I don't want to buy high, I want to buy low. And the best ones here are getting in right below that prior swing. If we're really lucky, guys, there'll be a channel here. Off the high, off that low. I mean, my goodness. There's not many guarantees in anything in trading, but that's almost a guaranteed winner. It's a V-bottom off that low. It grinds up now. We find that channel, and most importantly, getting in underneath prior swings if it V-bottoms. That's the 2nd out of 3 ways I'm looking to buy a breakout pullback tomorrow. Before we talk about number 3, which could be my favorite out of all of them, let's slow down for a couple of seconds because I know most folks watching right now, you guys know these patterns. You're making money with these already. But if you're here for the first time, watching for the first time right now, this might be a brand new language, a brand new strategy tonight. Don't you worry though. I teach this entire system in my free trading course. In fact, I have a ton of examples of breakout pullbacks, bear traps, add-ons, separation away from the moving average. Guys, the markets are way too good right now not to be making lots of profits these days. What I'll do is I'll put a link up top here for you, upper right-hand corner. Hit that link that popped up there and take that free trading course because the strategy I teach in that video course will teach you a very simple trick we use in our members trade room that literally tells us exactly where to find the winning trades each day. You'll laugh when you see how simple that technique is. More importantly though, I want to teach you guys my 4 favorite entry setups so you can time better entries, make a lot more consistent consistent profits. Guys, bottom line, if you're still missing the best entries each day, if you've lost your confidence in your current trading strategy, hit that link that popped up right there. Watch that short video course. Everyone loves all the trade examples I include in that short video series. The best part is it's completely 100% free for you. Also, too, guys, keep in mind, too, I'm going to put all the important links you need to learn the roadmap, time better entries, get your confidence back in your trading. Guys, most folks start making money all on their own, all from that short video course there. So grab a link in the description. I'll put all the important links below the description of the YouTube video. Also be aware too, I post a ton of charts and videos and mindset stuff on Twitter or X during the day. If you're on the X platform, give me a follow too. I'll put all my handle down there. Again, everything you'll need to learn the roadmap here in the description. So now you know where to go to get more information here about the strategy I'm talking about right now. Now let's cover a couple more variations. For example, oftentimes we'll get a nice strong run going lower. We'll get a bear trap down here and we'll get a nice big pop going higher. But you'll notice there's a small little range right there. What do ranges do? They love to break out pullbacks. So in the event that we do see the run going lower, we'll oftentimes get that bear trap right there. Now, you'll learn this in the video course I mentioned earlier, but I always go 1-to-1. So stop to first target, take that first target off, get rid of the risk, move that stop up to point of entry. Again, you'll learn this technique in the video course. So oftentimes what happens is I'll get a winning trade off that breakout pullback, but it won't go all the way back to retest the high. They'll hold some previous level of support, turns into resistance, and it makes that next leg going lower. Okay, we call these retest trades in our trade room, and they are by far my favorite out of all of them. In fact, I wish we got these every day in the morning trade room. The bottom line is this: once we go back and retest that low again, think about what's really going on in the market right now. Anyone who sells on that move going lower, where do you think their profit target is? Their targets are back at that low. So sellers up here become buyers down here. This is a horrible place to be selling. We're an overall bull market. We're not a bear market right now. So whatever goes lower right now will probably get bought right back up. Again, we call these retest trades. Breaks down, pulls up, retest. Want to buy this thing now going right back up again. We almost had one today in the trade room. They're very common, not every day, but very common though. Now, the most important thing is do the exact same thing. Remember, trading is repetition. Trading is repetition. It's boring sometimes, but boring pays really well. So again, do it again. Bears once, bears twice. I'm not going to waste my time with indicators or trying to read order flow. I like to use traps. I find traps work the best overall. So trap the bears in once, twice, buy right into those stop losses. And again, the minute I start seeing that separation off that moving average, separation, higher high, is the minute now I start adding to my winner. Because I'll tell you, once you learn how to add to your winning trades, it will make it a lot easier to make a lot of money in a very short period of time, right? So a retest trade, a double bottom retest trade works fantastic in an overall bull market like we have here right now. And then one last thing too here. You'll notice, and we'll grab the Nasdaq and we'll cover the Nasdaq. I want to talk about the Nasdaq if we keep going higher here. Because if we keep going higher overnight, all of a sudden this changes a little bit. So we'll cover that here in a moment here. But you'll notice right away, there's a range right there. There's a range right there. The amount above, the amount below. We call these pendulum swings, range rotation. You'll learn this in the free video course. So what do you notice? That pendulum swing doesn't put me down in the breakout pullback zone. So in all reality, we may not get that full pullback all the way. What if all we get is a pendulum swing down around, let's say 27. And we'll take a look at the same levels in the Nasdaq here in a moment, don't you worry. But what if all we get right now is a shallow pullback? If I get a shallow pullback, what's my problem? My problem is we're so high up right now. A shallow pullback says I don't have a chance to buy low. On a deep, scary pullback, I'm buying low. I can be somewhat aggressive on that deep, scary pullback, right? A deep, scary pullback, I can risk small to earn large, right? I can be a lot more aggressive on that entry. A shallow pullback, see now, I can't do that anymore, right? Now my risk reward ratio is now all out of whack. How do we solve that problem? This one simple pattern, I teach this in the free video course, is going to be a bear trap. What we call a technical bear trap. Now, what's the difference? A regular bear trap, we run down, we trap the bears in, we bind stops. A technical bear trap is going to get us in just below the prior swing in between. Now, why would that be effective? Well, because now, what's my risk reward ratio look like? It's like this, right? Now my risk reward is like that. As opposed to if I bought above that high, now my risk reward ratio looks like that. Does that make sense? That very simple difference, right? That little adjustment when a shallow pullback, we buy technical traps, a deep, scary pullback, we bought more aggressive with the 2-try failure style traps I teach in the video course. Hopefully that makes a lot of sense, because that alone right there will keep you out of the red in a lot of situations. So be aware of that for a shallow pullback, for a trap. Now, let's go to the Nasdaq right now, because the Nasdaq, we may keep on going higher here. I want to make sure you guys have a game plan for that. And what if it goes sideways as well? There's a range up here right now. What if that range was to hold on for tomorrow? Let's talk about the Nasdaq right now. And again, on the Nasdaq right now, look at the moving average right here. Look at the 21 EMA. Look at how much separation the buyers are getting above that moving average. Now compared to going lower here. Again, the bears, they had everything they needed. They had a strong run down. All they had to do was hold that pullback and keep going, but they couldn't. That's what tells me right now that, you know, the bulls are not perfect right now. There's a lot of concern about sentiment because the delaying trade deals and the deficit. There's a lot of sentiment problems right now. There is. But we're definitely not a bear market right now. It's very difficult to make an argument right now for a bear market. Every time we've gone lower, whoop, right back up again. Goes lower, whoop, right back up again, right? So again, I'm definitely it's very difficult right now to make an argument for a bear market right now here on the S&P and the Nasdaq. In case you're wondering, again, I use the 21 EMA. Look at they're jumping off that moving average. They're not getting anywhere close to that right now on the sell side. So we're definitely still a bull market overall. Now, by the way, if you're enjoying this video tonight, please help me grow this channel here tonight by hitting that like button for me. And please make sure you subscribe and set those notifications. I know we're all busy people these days, and I appreciate you guys tuning in and watching my videos here every evening on the YouTube channel. So thank you all for the likes, the subscribes, all the ongoing support down in the comment section below. Now, let's dive into those tick charts here, because again, we're not going to use a time chart to time entries in our trade room. See for yourself. Go get yourself some tick charts. I prefer ninjatrader.com for tick charts. Get some tick charts going. This is a 4,000 tick chart here now on the Nasdaq, and you'll see right away how much better the patterns are on a tick chart compared to a time chart. Well, once again, same clues here on the Nasdaq right now. Separation, grinding up, like right there, right? That separation right there. They don't pull back to the moving average. They don't pull back to the moving average, right? All of this is over here, right? They don't pull back to the moving average. That separation says a very, very strong move going higher. Anytime we see a strong move like this combined with a range breakout, this is why I said earlier, it looks like the money is made on a breakout pullback here for tomorrow. Now, I mentioned earlier 3 different variations of breakout pullbacks, right? I mentioned the scary pullback, right? The bears trying twice and the back up again. I also mentioned earlier too, right? That V bottom, if it really gets crushed going lower. And again, just like on the S&P earlier, right? That move below that in the bear trap zone. Do not be fooled by a sharp pullback right now, right? Until that hourly time frame changes direction, I will keep on buying the dips until proven otherwise by the hourly time frame. So a V bottom off that low, finding that new channel. We mentioned that earlier. The retest trade, always one of our favorites in our trade is a retest trade and a shallow pullback, right? Shallow pullback with traps Because why? Because that gives us the risk reward ratio we need to make money consistently. Now, here's a couple of questions right now. What if we go higher here? Because in all reality, this thing's grinding higher. We may end up going higher here. Oftentimes what happens is that when we have a range breakout, for example, right now, I can buy relatively low and buy that breakout pullback. If this thing keeps on going overnight, all of a sudden now, that breakout pullback zone becomes almost impossible to reach. It becomes a bit unrealistic, right? So let's kind of play devil's advocate right now. Let's suggest now that we go a bit higher here overnight, where we take out some of these pendulum swings overhead here. Let's now play devil's advocate. We go higher here overnight. If that happens now I start watching that prior high. So in all reality, if we go higher, again, it makes sense, right? If we go way high up overnight here now the ability to get back into that breakout pullback zone, it's just not as likely. It's possible. It definitely is possible. It's not impossible, but the odds aren't as high anymore. So if it breaks out and keeps going higher overnight, and this again goes for the S&P as well, now we start watching a little bit higher up levels, right? Now this whole area becomes a breakout pullback. So in this scenario, we make a nice, strong, big, or we keep grinding higher overnight. And now it's the same idea now, but now that the actual levels themselves now are now a whole lot higher. I just still watch for that pullback, that bear trap, and snap back up. The same basics that we mentioned earlier on the S&P can be applied there, the Nasdaq as well. And of course, speaking of the S&P as well, right? S&P too, right? It goes up a bit higher now. Now think of that area right there, that area right. You know what I'm saying, right? So think about that high. It all depends on how far we go. The higher up it goes, the more likely now that level gets used, right? Remember, everything's relative, right? When I say buy low, everything's relative to where the high is, right? So buy low could be a lot higher if we go a bit higher here overnight. So that's one of the benefits, of course, being with us every day in the trade room with all the members, because we go over this stuff in real time as it's developing every morning at the opening bell. So just some food for thought there, right? If it goes higher, by the way, I am not trying to sell it. All right, this is too bullish right now. You'll make a lot. You will avoid most losses trying to call tops in markets like these, right? It's very difficult to consistently call tops in markets like these. So I won't even try to pick a top on this right now, especially when it's separating off that moving average. So I'll tell you right now, more money was lost trying to anticipate that pullback than simply waiting for the pullback and trading the pullback like I'm teaching you here for tonight. I also want to talk about too, what if we go sideways overnight? Remember, sideways ranges are the easiest to make money with because they love to rotate and they act like magnets. So if we go sideways here overnight, which would not be a huge surprise to us because we got big news later on in the week. We heard today that Trump and President Xi from China are supposed to be speaking at some point here this week. So there could be a bit of sideways back and forth here as folks wait for more information on that. Now in this scenario, this becomes what we call stacked ranges. So think about this. If we go sideways here overnight or at any point tomorrow morning, that previous range is still begging for a breakout pullback. Now, the reason why I love this scenario is because as we go lower here right now and trap in those bears, same thing, right? Bears once, bears twice, trap the bears in, kind of a two-try bear trap. Look over there, right? They run lower, bears once, bears twice, squeeze those stops. We see so many of these. We saw that beautiful breakout pullback this morning, the trade room, pulling back, bears once, bears twice. Okay, I've said that a couple times here already. So same thing, right? Breakout pullback, it's a bear trap. We're not going to blindly buy the breakout pullback, bear trap. And then as we go higher, we're simply adding to our winners. Now, what makes these so powerful is that now the market wants to rotate, right? Like over here, right? Range right there, the amount below the range, the amount above the range. It's no coincidence that that's where that market stopped on a dime like that. So knowing that's how ranges work, the amount below the range can now project, see why I love these? This is why I love these so much, right? Because now we know it's not just a retest of the high, it's a pendulum swing on the opposite side of that range. This is why ranges are oftentimes the most lucrative types of markets we trade in our trade room. And as always, don't forget that knife cuts both ways, right? So if we go sideways tomorrow and we go higher first, sometimes we'll go higher first and then kick back down again. This will feel like a reversal. I'm going to warn you right now. This, I mentioned earlier, the scary trades, right? The scary ones are oftentimes the best ones. This is the definition, if you're a newer trader, that will feel very scary because these tend to snap going lower there off that high. But you know too much now, right? You know better now. It's not a reversal, it's a range rotation, right? So range is amount above, the amount below. Right now, again, that will feel very scary. It'll pull back to that 21 EMA, and like here, right, like there, all we do is wait for the pullback, bears once, bears twice, trap those bears in and squeeze those stops running back higher again. Or it may go like this, right? A big strong run going lower, right? Blow right through it. Again, this will feel very bearish right now, but we know that. We know better than that, right? It V-bottoms back up, starts grinding higher, and we go right in and execute that V-bottom game plan I mentioned earlier, getting below prior swings off the low of that channel. So we can use these techniques in different ways, but remember that range is a gift from the trading gods. It makes everything so much easier and makes it easy to hold a nice big profit target for us on that rotation. Right, guys? That's the game plan for tomorrow and some variations in case I'm wrong about this stuff. Now, speaking of tomorrow, though, the place to be is my trade room. Every morning, 8 o'clock Eastern time, I'm going to put all the important links you guys need to learn the strategy, start making money on your own, and get your confidence back, get your mojo back in your trading, and hopefully I'll see you sometime soon trading with us as a member of the morning trade room. So grab the free link there. In the meantime, guys, be well out there. Be nice to each other, will ya? And be here next time. Adios, amigos. Bye for now.